13.7 million members. Let that number sit for a second. That is how many Americans that have downloaded the SoFi app, created an account, and are actively using it to borrow, save, or invest. That is more active users than Schwab had in 2005, more than E-Trade had in 2010, more than most regional banks have today in their entire customer base. See, SoFi grew from 8.1 million members to 13.7 million in just 8 quarters. That is 69% growth. In Q4 2025 alone, the company added over 1 million new members in a single 3-month period. Revenue crossed $1 billion in a single quarter for the first time ever. The stock is consolidated around $16 to $17. Something is wrong with that math. And in this video, I'm going to show you exactly what that is. So there's 3 things you're going to take away and be able to make a better educated investment decision moving forward. How SoFi's business model actually works and why 13.7 million members is more valuable than most people realize. The second part is going to be why $17 looks completely wrong compared to every similar company at this same stage, and the honest reasons the market might be right to discount it on. The third, the specific advantage SoFi has that no other app-based financial company can copy, and why it matters more than people think. Let's get stuck into it.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
So if you don't know who I am, my name is Mikhail, and one of my highest values in life is freedom. That's why over the last 4.5 years here at X10, we have built an AutoPilot software that allows our professional traders to trade directly through your portfolio into the accounts. One of the great things is you never have to send us money. We have a 100% money back guarantee, and we get results like this for clients, results like this over the last 7 months, and results like this for clients every single day. Now we have clients with as little as $10,000 in their portfolio, all the way up to $500,000 and $600,000 trading using our software. So if it works for them, I'm very, very sure it can work for you. We also have over 500 members who are active using our software. Book a call with me and I'll walk you through our entire software, all the trades we've been taking over the last 7 months. We're super, super transparent with everything we do. And one of the best things are in this current time in the market, there's a lot of concern, there's a lot of risk management happening. Capital preservation is one of our highest value. So that's why we only take same day trades. We never stay in the market overnight because some people can tweet or post on X, I still call it Twitter, and they can massively swing the market, right? We don't live in that world. We're same day in and out. And one of the great things is your money is always liquid unless it's currently in a trade, but we never risk more than 5% every single trade. We have over a 78% winning streak in everything we do. So if you want to find out more, you know what to do, but let's get stuck into today's video. So to understand why 13.7 million members matters, you need to understand how SoFi makes its money, because it is not just a bank. It is not just an app. It is something in between that is actually the point. So how it really works on a high level. A new member joins SoFi. Let us say they come for the savings account because SoFi has been offering some of the highest interest rates in the country. The average big bank savings account pays almost nothing. It could be like 0.04% or close to zero. SoFi pays around 4.6%. On $10,000, that is $460 more per year in your pocket just for switching. So the member joins, moves their money over, now they have the app. And inside the app, they start seeing other things, personal loans at a lower rate than their credit card, a brokerage account to invest in stocks, a credit card with cash bank rewards, student loan refinancing, even renters insurance. So the key part is SoFi paid to acquire that customer once. And what they've offered on the back end is almost in the form of an upsell. You know, if you go into the gym and you're going to buy a weekly membership, $20 a week, it's hypothetical, and then all of a sudden there's an upsell with you. There's, oh, would you like a personal trainer once or twice a week? Would you like this protein shake? Would you like a nutrition plan? Like, this is how SoFi are able to stack a higher lifetime value per customer because they have so much on the back end. See, the acquisition model on the front end could be the fact it's just they offer a better student loan deal. See, marketing 101 is companies will sell you what you want, and then the back end, they give you what you need. So that creates an easy sequential order for people to purchase more and buy into what they're doing. Every extra product that customers add after that costs SoFi almost nothing extra to sell. The customer is already acquired. It's already there. The relationship is already being built. So that is what makes this a platform, not just a product. And the data backs it up. In Q4 2025, 40% of all new product signups came from existing members adding something new, not new customers, existing ones. That means nearly half of all growth is coming from people SoFi already has at almost zero extra cost. That is what I like to call a flywheel. Sign up once and keep selling more. They move through the architecture of the system and the products. The bigger the member base, the more powerful the flywheel gets. So if we look over the numbers here from Q1 2024 all the way through to Q4 2025 and look at this member growth, there's something about it. It's almost linear in a sense. And we can see here Q2, 9 million, Q3, 9.5 million, Q4, 10.2 million, and we go up and up and up. 13.7 million in Q5, which was their biggest single quarter. Now, not a single quarter shows decline, shows stagnation, shows a reversal at all. Now, 8 quarters in a row, all up. The record of just over 1 million added in Q4 2025 makes that final bar noticeably taller than the other one before it. That is what 69% growth over 2 years looks like on a chart. So I want to break down why I believe $17 looks wrong, just using math. So there is a number called the price to revenue ratio. It compares how much a company is worth to how much money it brings in. A higher number means investors are paying more for each dollar of revenue, usually because they expect strong growth. SoFi trades at about 4.1 times its annual revenue. So let me show you what similar companies were valued at when they hit roughly 13 million users. PayPal in 2018 at around 13 million active accounts, 8.2 times revenue. Robinhood at 13 million accounts in 2020, 12.5 times revenue. The Cash App at 13 million users in 2020, embedded in Square's 9.8 times revenue. Chime at 13 million members in 2021, 18 times revenue in its last funding round. Now let's look at the average of those companies. At the 13 million user milestone, about 12 times revenue. SoFi is at 4.1. That is a 66% discount to the average of its closest peers at the exact same stage of growth. Now I want to be very objective looking at this, right? Because the bear case says that the discount itself is justified and it is worth taking seriously. SoFi lends money to people. Personal loans, student loans, home loans. So when interest rates stay high and people struggle to repay those loans, they can go bad. That is called credit risk, and it is a real risk. PayPal, Robinhood, Cash App, and Chime do not lend money the same way. So comparing SoFi to those companies is not a perfect comparison. But here is what the argument really misses. SoFi's fee-based revenue, the part that has zero credit risk, grew 53% last year. It now makes up 43% of total revenue, and it is going toward 50%. In plain terms, SoFi is becoming less of a lending company and more of a platform company every single quarter. The risk profile is changing, but the stock price has not reflected that change yet. So if we look at this image here, we can see this is on the left-hand side, this is the fee-based revenue by quarter. 155 million in Q1 2024, rising every single quarter, all the way to 443 million in Q4 2025. Every bar is taller than the last, and the right panel is a rising line showing fee revenue as a percentage of total revenue. So it starts at 26.7 and we can see it goes all the way up to 43.2% by Q4 2025. The green dashed area is just our 50% target, and that line is heading straight towards it. What this chart is showing you is a transformation. SoFi in 2024 was mostly a lending company with some platform features. SoFi in 2026 is becoming a platform company that also does lending. That shift matters for how the stock should be valued, and the market has not fully priced it in yet. But to this, there's also a caveat that most people overlook in this story. SoFi has a federal bank charter. It received this from the government agency called the Office of Comptroller of the Currency in February 2022. So what does that mean in plain terms? It means SoFi is a real bank, regulated the same way JP Morgan and the Bank of America are regulated. And that matters for a couple of really big reasons. The first one is it has access to cheaper funding. Before SoFi had the bank charter, it had to borrow money from expensive sources to fund the loans it made. Think of it like a business that has to use a high interest credit card to buy its inventory. It is expensive. Now, SoFi has 38 billion in customer deposits. That money costs much less. It is like switching from an expensive credit card to a cheap business loan. That difference in cost goes straight to profit, and it grows every time a new customer deposits more money. The second part of this is it is a moat no app can replicate. Robinhood cannot just decide to become a bank tomorrow. Chime cannot. Cash App cannot. Getting a federal bank charter takes years of applications, regulatory reviews, capital requirements, and ongoing government oversight. It is one of the hardest things to get in American finance. SoFi has it. Most of its competitors do not. And there's one last thing that's worth saying about the bank charter. When the Muddy Waters short seller report came out in March, it accused SoFi of hiding debt and manipulating its loan values. But here is what they seem to miss with that. SoFi is not just audited once a year like a regular company. Its books are reviewed continuously by federal bank examiners from the Federal Reserve and the OCC. These examiners have full access to every file, every notation, every loan, every internal document and communication. If the accounting problems Muddy Waters described were real, federal regulators with power would have found them first. That ongoing government review is a form of credibility that no pure app-based fintech company has. Now, in Q1 and 2 in 2024, SoFi crossed from losing money to consistently making money and the profit growing. A company with rising revenue and rising profit and 13.7 million members trading at 4 times revenue, that is the disconnect this video is about. They're a highly profitable company. They have a proof of concept and they're doing it well. So if we recap all of this, they have 13.7 million members. It grew that base 69% in 8 straight quarters without a single decline. In Q4 2025, 1 billion in revenue, 174 million in profit, 38 billion in deposits. The stock is at $17. It's floating between 16 and 17 right now. Every similar digital financial platform at 30 million users has traded at an 8 to 18 times revenue. SoFi is at 4. The bear case is very real. Lending risk is real. Credit losses are real. And the comparison to pure app companies, it's not perfect. But those risks are all worth tracking and those comparables are worth doing. But the data is also telling a very solid story. Fee revenue we looked at earlier, the part with no lending risk, is growing to 53% per year and now makes up 43% of the total revenue of the company. The federal bank charter gives SoFi cheaper funding and ongoing government oversight that no app-based competitor can replicate, and 40% of new products are being added by people who are already members. Proof that the platform flywheel is working. At $17, you are buying 13.7 million members, a federal bank charter, 38 billion in deposits, and a growing profit business at 66% discount to what every comparable company traded to at the same stage. The market may be right to be cautious, but the gap between the price and the business is hard to ignore. As always, not financial advice. Do your own research. If this is part of your research, amazing. And if you want to keep up to date with everything that's happening in SoFi, the projections, and how to be managing your investments and your exposure in 2026 and beyond, I'll be making videos here every single week. Also, you can come check out my 2 other channels here. I'm posting up to 3 long form videos a day. So as always, I will see you in the next video.